All right, guys, we're going to talk about a unique state income tax deduction strategy that if you're a small business owner, specifically an S corporation, LLC taxes an S corporation, LLC taxes a partnership, multi-member LLC, where you can actually take this unique state income tax deduction when most people can't. And there's strategies around this that you have to look at. A couple key things with this. One is you have to look at what actual states allow for this and check with your treasury to see if there's actually your state has even come on board with it, or maybe they're coming on board with it this year. And there's procedures on how you have to follow this to get the deduction. So here are the states that allow the deduction on this, guys. So you got Ohio, that's where we are, Indiana, Kentucky, Illinois, Pennsylvania, Florida, Arizona, New Mexico, all these different states that allow this for you. And there's three scenarios where this can play out, and you need to be aware of these and how this works for you as a small business owner. So let me get into this right now. So business owners that are not able to itemize on their 1040, and they live in one of the states that are highlighted that I talked about, because there's scenarios where you're taking property tax deduction, state income tax deduction, local deductions, mortgage interest, whatever, but you're still not getting to the standard deduction that everybody gets anyway. And what am I talking about there? Let's take a look at the standard deductions that are out there. So everybody gets a standard deduction regardless, and the first amount that's not taxable when you make income. And again, this is not for W-2 earners. This is for business owners only that I mentioned before. So as we go through this, if you're not one of those, go ahead and jump off. I don't waste your time. But anyway, filing singly, your standard deduction 16.1K. Married filing jointly is 32.2K. Head of household 24,150. So what I'm talking about, let's just look at a married filing jointly, $32,200 standard deduction. Now, if we go to our financial planning software we use for our clients, it's the #1 ranked financial planning software in the entire country. It's ranked by the T3 Insider Software Survey the past few years. So all our clients get access to this software that they can utilize in their planning. So if you want a complimentary access to this for 180 days, comment plan down there and we'll actually get you set up with this and you can test it out. But anyway, one of the sections that we look at is this tax section up here. When you look at the tax section, you go to this details. We run these simulated 1040s, guys, that you can do. Like, for example, even though we're sitting in 2026 projection, I can choose any future year and it'll project out what your taxes are going to be. That's what we get into, whether it's going to be Roth conversions, impact from Medicare premiums. We want to look at all this. But the key thing I'm looking at here today is the itemized deduction line. This is 12E on your 1040. For this couple, $35,500 is their standard deduction initially, but then they get a bonus because they're 65 and older. It's at $5,751 additional. There's some parameters here that could be higher than that, but based on income, this is driving their deduction down. That's another thing we look at, how to reduce your adjusted gross income on line 11B so you don't get impacted by some of these offsets, so you get the full deductions. We get into all this. So anyway, there's total deductions 41,250. So they may not be able to even take an itemized deduction using state income taxes. So what do? They take the actual deduction here, standard deduction, and then they go on to their S corporate return or their multi-member LLC return, and they can deduct the state income taxes there through this scenario I'm going to talk about. And then you still get the deduction, even though you couldn't take it on your 1040. But anyway, that's option number one. Let's go back to option two here. Hold on one second. I'm going to switch back to this. Business owners approaching 40,000 state local property tax deduction limits. So that's the other thing. Maybe you're actually approaching the limits and you're at 40,000 and all these other deductions. Yeah, you're able to itemize, but you're capped out in your state and local property tax deductions. So that way you could go on top of that and through the business pay your state income taxes to the state based on the parameters the state requires to get that deduction. So that's option number two. And then business owners with income above 500,000 of modified adjusted income. Why is that important? Because if you look down here, the new One Big Beautiful Bill Act actually put out that the state, local, and property tax income tax deduction went from 10,000, which it was capped at, which was horrible for a lot of people, but they jacked it up to $40,000. So when they moved that up to $40,000, they said, okay, you can take all these new deductions now. But the problem is, and God bless these people that are making over $500,000 AGI. And that was that line 11 that I was showing you before on the tax return. I go back there real quick. So if we go back to this line 11 here, 11B, if your AGI, maybe your business owner is just crushing it. God bless you again. You're making over $500,000 a year. What happens is that deduction of 40,000 cap on your state property and local income tax deductions on your return starts to phase out, where then it phases out to the point where it goes back to 10 grand down here. If you look right down here, it goes back to 10 grand right here. You're at 40,000, goes back to 10 grand in the 600,000 range. Well, now you can't even take those deductions. Well, then now you still got that opportunity. And this is why these states passed this pass-through entity tax provision, said, all right, the federal government is going to cap you on your deductions. This is all during COVID and all that. But hey, we're willing to give you this break if you go ahead and pay your state income taxes through your business account. That makes sense. So those are the three strategies you're looking at. Now for Ohio, based on everything that we're seeing, is that you have to pay the tax out of your business during that tax year. So 2025, you had to pay through all 2025. So that's why it's key right now, very important, to check on your state requirements to do this, because you might need to start paying your state income tax out of your business account right now in this tax year to be able to take the tax deduction for 2026. If you've waited till April, that's too bad. It's kind of like your engine oil. If you forget to change your engine oil, it blows up. You can't go back in and put the oil in to get your engine back. So bottom line is, reach out to your CPA, your enrolled agent, whoever, accountant, whoever's doing your tax planning. Get with the treasurer of your state and check this out. Or reach out to us, or like I said, in the comment section down below, type the word plan. We'll send you access to the top-rated financial planning software in the country. Use that for 6 months if you want to bring us on for a discovery call to check out your situation. We have a $2,000 promise retainer value guarantee. And what that means is, if you take time and have us look at your overall situation, from tax planning to asset preservation to investments to retirement planning, estate planning, we promise to show you $2,000 to $20,000 worth of new ideas that are actual dollar value in your pocket, not even just this year, but possibly for every year ongoing, that maybe you've never seen before. And if we don't show you that, so example, you invest $2,000 in our consult, we only show you $1,000 worth of ideas, we're going to refund back that $1,000 back to you. So we're promising to give you some value no matter what your investment is with us, if that makes sense. If you want that, like I said, comment plan and we'll get a hold of you. Appreciate you watching on, and I'm going to rule my disclaimers. Have a good one.